All right, Bulls and Bears, we have to talk about what's going on here. New home sales just plunged, the biggest month-over-month drop in about 10 years, actually since 2013, so over 10 years. And new home builders, they are pulling back and actually leaving homes unfinished. So this is going to lead to a bigger problem with supply. And guess what? It's going to cause prices probably to stay elevated, and certainly not any sort of housing correction or crash that many people were talking about, right? So we're going to get into that and a heck of a lot more financial, economic news today. Please make sure you are subscribed so you can stay ahead of the financial, economic curve. And let's go ahead and get right into it right now. New home sales plunged. Folks, this is the biggest month-over-month drop. So in October from the month prior, we're down 17.3%. But here's the problem. Prices went up even higher because of lack of supply. And we've got home builders out there now talking about leaving partially built home projects unfinished. Look at this out of Benzinga. Millions of homes will stay unbuilt. What builders see that the policymakers do not, folks? What do they see? They see a struggling buyer, people struggling to afford homes, even with all the assistance programs, the rising mortgage rates, and the rates dipped for a while, but even with the lower mortgage rates, sales still plunged. People that are in their home with an ultra low mortgage rate are sticking in their homes. They're holding on to their homes. They're not desperate enough to have to forcibly sell their home, or they don't have their backs up against the wall so much where they have to sell their home. In 2008, we saw a lot of people over leveraged, putting their homes on the markets because they had to. We're not seeing it this time, folks. And this is going to lead to more rising prices, and it's going to cause the areas that are dropping in prices to stay elevated and not drop so quickly. But overall, I think people waiting for a lower home price environment, they're going to be very, very disappointed. A little bit more over here out of this article. Builder behavior often tells insights or gives insights into market conditions. Housing Wire said construction companies have shown increased optimism when mortgage rates approached 6%, but consistently pulled back when rates climbed between 6.75 and 7.5%. The pattern extends beyond single-family homes, with multi-unit permits already at recession levels. Now, remember, we were told that there was a record amount of homes coming onto the market, that we had all these multi-family homes coming onto the markets, and it was going to cause a big increase in supply. Therefore, the prices were going to start dropping. Folks, we really haven't seen that to a large degree. Median home price, looking at used and new home prices combined, they're down about $20,000. Median home price down about $20,000 since the peak. But folks, that's about what we see in a seasonal dip. And what's happening now, we're almost at the end of November, and we're not seeing much of a correction. We could see prices start shooting back up in in the spring. We could see prices start shooting back up in the spring with more buyers coming into the market, more down payment assistance programs. They could even drop the mortgage rates. We'd have the central bank have to come in and buy a bunch of bonds for that to happen. So unless somebody stops the usual suspects from propping this thing up and sending it higher, we're going to see a much higher home price environment here going into next year, unfortunately. Now, I say unfortunately, speaking on behalf of the millions and millions of people that are priced out of the housing market right now. Now, maybe if you're looking to sell your home, that's good news. If you're putting your home on the market in the next few months, of course, you don't want there to be a beginning of a housing market correction. You want there to be further appreciation. But it depends on how you look at it, right? Glass half empty, glass half full, depending on what side of the fence you're on. Maybe you're on both sides of the fence. Maybe you're someone that's in a home now. You don't want to lose your home equity, but you're looking to upscale or upsize, but you can't afford that bigger home now because of everything that's happening with the rising prices. So it's a mixed bag depending on your position. And if the housing market wasn't crazy enough, folks, look what else is happening with car prices. Used car prices are rising again, and that could be a problem for the Fed. And we're going to talk about the Fed minutes here in just a little bit, but the Fed's talking about more rate cuts, even though prices are rising and things aren't becoming more affordable. Even though they're telling us inflation's coming down, things are actually becoming less affordable. Prices aren't shooting up as quickly as they were before. So now that's the talking point out of the central bank. They're saying, well, look, inflation's coming down. Prices are still going up, folks, for most things, just not as quickly as they were before. Now, cars, vehicle prices still down from the peak, just like homes, but this could just be, again, a seasonal dip with the prices still even going up in November, which is typically the slowest time of the year, November, December, January. Even now, though, prices are going up for cars. So what's going on with all this debt out there? Why are people still able to afford these cars? It's because the banks, folks. It all goes back to the banks and our system of money. Ever since we came off the gold standard, there's been no limits on the amount of money they can throw at the problem. In other words, there's no limit to the fuel they can keep throwing on the fire, right? And that's the problem. They keep throwing more fuel on the fire. They can make a choice to not throw fuel on the fire, but then this whole house of cards collapses because the economy, the way it's run right now, to continue the illusion of a growing economy, they have to continue the borrowing, the spending, piling on the debt, people piling on debt, the government piling on debt everywhere you look, folks. So that's why the fuel and the fire situation may never stop unless something massive comes in, like a World War III, Black Swan, something that throws a monkey wrench in the gears of the money creation system to actually stop this. Many people say we're on the doorstep of that. I've been saying be careful, keep a lookout here for many months, as there's a lot of risks out there right now. And I haven't stepped back from that position. Just because October's done, November's almost done, we're still not out of the woods, folks. I think we're going to see some fireworks pop off very, very soon, possibly before January, if you know what I'm talking about. So there's certain policies that are very chaotic, or if they were implemented, they would be very chaotic. So there's going to be some people out there that are going to stop it from happening, if you know what I mean. Fed officials see interest rate cuts ahead, but only gradually, meeting minutes show. So we have the latest out of the Fed meeting. I did watch some of a press conference, but basically it's what I expected, so I didn't watch very much of it. Same talking points. The economy is very strong. We're on solid footing. The consumer is resilient, but yet we have to cut rates, right? So the two really don't go together. If the economy is strong, great, let's raise interest rates even higher. How's about a 10% funds rate, right? How's about a 12% mortgage rate? And then you may start seeing some bigger corrections in the housing and the cost of living. The problem is, if the housing market slows down any more, you're going to see an absolute collapse out of the entire industry that's connected to housing, the realtors, the loan officers, the appraisers, the remodelers, everything. It would come crashing down. That's why the housing market must be propped up in order for the economy to continue looking like it's not collapsing. The meeting summary contained multiple statements indicating the Fed officials are comfortable with the pace of current inflation. In other words, they're comfortable with the cost of living going higher. Now, some people say inflation is just the money creation. That's part of it. That's a huge part of it. But that's not all with inflation. So I know most of you understand this, but there's still a few people in comments that seem to be confused. Inflation's more than just the money creation, right? There's something called supply and demand, right? There's a lot of factors here. Look at the housing supply. If there were 10 times the homes right now for sale, you wouldn't see prices as sticky as they are. You'd finally start seeing some price corrections. In other words, yes, money creation is a big part of it, but there's much more to the puzzle than just money creation. The meeting summary contained officials talking about most measures. It's okay now that the rate of inflation stays above the goal of 2%. So in other words, 2% is no longer a goal, or they can say it's a goal just to say it, but if they don't hit it, doesn't matter. They're still going to cut rates even though they haven't hit the 2%. You see what I'm saying here? So what they're saying doesn't make sense. You can see right through it. I can see right through it. I know you can probably see right through it as well. Please let me know down in the comments. I mean, most of you are well on top of this, and many of you much more than I am. What's going to happen in the housing market, and will there be some big situation that pops up to derail this infinite home price growth attempt? Folks, here we go again. Another holiday season, another record travel scenario. The Thanksgiving holiday rush neared its full stride at U.S. airports Tuesday, putting travelers' patience to a test. The TSA expected to screen more than 2.8 million people and 2.9 million people on Wednesday after handling more than 2.5 million people on Monday. And by this standard, it's looking to be another record holiday season. Even though the debt levels are at all-time highs, most people living paycheck to paycheck, most people don't care. They just want to live life. They just want to have fun. They're not going to let the amount of debt that they're in dictate what they can do, because they always know that at the end of the day, you can just charge it off. It's called bankruptcy. Most people don't want to do that, but when you look at their spending habits, it doesn't look like they're actually afraid to do that. Because when you look at the debt levels right now, a lot of people are just driving themselves into bankruptcy. And again, bankruptcy is not the end of the world, and that's part of the problem, folks. When bankruptcy is looked at as just something that you do to get out of jail free, then people are just going to spend themselves into oblivion and not even worry about what's due tomorrow, as long as they have fun and they can buy what they want today. So for those of you that are looking around and gauging the economy based on the mall is full, the stadiums are full, the bars, the nightclubs, the restaurants are full, folks, it's mostly borrowed money. And again, if you have the system of money where you can just throw endless amounts of fuel on the fire, you're going to see this. But there's a consequence. It's called inflation that doesn't stop. It's going to continue to rise. And now even the central bankers that are supposed to control inflation are saying, okay, we don't want the cost of living to come down. We're going to allow inflation to still go higher. But if they do it at a pace that's slower than the insanity that we saw over the past few years, they're going to call that a victory, right? And folks, it's not going to change, folks. So how do we brace for this? How do we brace for impact? What I'm doing is I'm sitting back and taking a wait and see approach, still in the markets to a small degree, but waiting for the next surprise or the next shock. Remember, if you were here on this channel in 2019, we predicted what happened in 2020. We said there's going to be some sort of scare. And of course, we saw a global scare with the health crisis. Brought the markets down temporarily. I had a few good trades during that year, especially the oil stocks when oil plunged to zero. And this time I expect something similar, maybe even to a larger degree or on a bigger scale to happen. I think it could happen any day. I think before January. But if I'm wrong, I'm okay, because inflation is just going to continue to go up. And therefore the stock market's going to be pushed to new all-time highs. As long as nobody takes away the fuel that they're throwing on the fire, in other words, the money creation, this thing could go all the way into a cost of living nightmare that very few people actually can even comprehend. It's so insane, right? But that's the news for today, folks. What do you think about the home sales, the home prices, car prices going back up again, even though it's November? Endless fuel to the fire, folks. Monetary fuel to infinity and beyond. Buzz Lightyear, folks. All right, everybody keep stacking. Happy early Thanksgiving if I don't see you before Thanksgiving. I think I'll be back, though. Hope to see you right back here in the next video. Please make sure you hit that notification bell. Talk to you, everybody, very soon. Keep stacking. Bye for now. Peace.